Going on, everybody? My name is Noah. Welcome to Systematic Investing. Here we cover everything stock related, which includes individual stock analysis, macroeconomic analysis, Federal Reserve Board meetings, different earnings calls, all sorts of stuff like that. And today we are going to be talking about a stock that I've become pretty interested in called Innodata, ticker symbol INOD. What is Innodata and what do they do as their main line of business? They provide data sets to generative AI companies to help train their models. They also have different tools to help people manage their existing AI and evaluate in real time to decipher its effectiveness and efficiency and make improvements upon it. They've been in business since 1983, so they do have decades of experience in this field. Obviously, generative AI has not been really around since 1983, so this working with generative AI is kind of the next logical step of their business moving forward, but we will get to that part later. As you can see on the chart here, this is the weekly bar chart for Innodata, and with a little bit of metrics there in the corner. Market cap 1.1 billion, 2024 revenue of 170.5 million, total assets of 125.2 million. Then we have a low here of about $3, a high of $71, and now after the tariff drama, we've settled at right about $35. All right, so now we're going to do a little dive on Innodata's website. And here we're looking at different applications of fine tuning. But first, let's just go over what fine tuning is. So, fine tuning involves training your AI model on curated data sets to enhance its task performance, like teaching tasks such as we have listed here, like content creation, editing, programming, translation, image and audio tasks, and general multimodal tasks. So essentially, a customer will come to Innodata and say, "Hey, my AI is kind of lacking in this certain area," and Innodata will come, feed it curated data sets, and increase its effectiveness in each of these problem sets. As you can see, with all these different things that Innodata can train generative AI to do better, that brings us to our next thing, which is going to be total addressable market. Having so many different industries that they can use it for, it brings a huge total addressable market, which means it has a large customer base. Having a large customer base allows Innodata to obviously sell to a broader range of people and potentially curate more revenue over time. So here we can see a list of different industries that Innodata has applied their technology to. So we have agritech and agriculture, energy, oil, gas, media and social media, consumer products and retail, manufacturing, transportation, logistics, banking, financials, fintech, and we have even more on the next slide here. We have legal and law, automotive and autonomous vehicles, which will be huge going forward, aviation, aerospace and defense, healthcare, pharmaceuticals, another big one, insurance, insurtech, another big one, software and technology, another huge industry. So Innodata is in all the cutting edge areas, applying their fine tuning and generative AI to help lead consumers to new, better, faster solutions. All right, real quick, let's just go over what we've gone over so far. So, Innodata provides fine tuning to drive effective Gen AI outcomes. It's applicable across a large range of industries that we've covered in the previous slides. And it has a very large TAM, which is total addressable market, which allows vast revenue growth over time. So, under case studies on Innodata's website, they have different success stories, which will let you see how top companies are transforming their AI initiatives with Innodata's comprehensive solutions and platforms. So here we have a list of success stories, and we're going to go through just a couple of these and see what kind of results Innodata is driving for their customers in order for them to grow revenue, in order for Innodata to get a slice of that and expand their business. All right, so our first success story here is going to be generative AI solutions for a leading information publisher. Challenge here. A major information publisher sought to deploy generative AI within the legal and regulatory operational processes. The goal is to achieve scalability across 13 European countries in multiple languages while maximizing efficiency. Solution. Innodata collaborated with the client to offer specialized consulting and implementation services. The process began with a vision workshop designed to educate stakeholders and identify potential opportunities for AI integration. Two areas were selected for initial 3 month proof of concept: abstract creation from German court cases, and keyword extraction and taxonomy matching for Dutch labor law books. Innodata engaged closely with key stakeholders to establish review and evaluation criteria for each POC. The implementations utilize advanced AI techniques, including generative pre-trained transformers, chain of density, prompt engineering, fine-tuning, and vector database with similarity matching. Impact. Innodata demonstrated that generative AI can enhance processes traditionally reliant on human expertise in language and legal fields. The results underwent a rigorous double-blind review process and were benchmarked against industry standards. German abstracts. Of the abstracts generated by GPT, 44% were rated favorably and deemed publishable without modification. In comparison, manually generated abstracts had a 58% approval rate, supporting the efficacy and subjective consistency of the GPT-generated content. Under Dutch keywords, the GPT system achieved a 25% exact match rate with manually tagged keywords. For reference, a comparison between two human taggers resulted in a 22% match, indicating that GPT solution performs comparably to the existing manual process. Both POCs will be further developed for production and scaled across country based on business needs and priority. Innodata is also proposed and will facilitate change management strategies to support the program's expansion. Additionally, new opportunities have been identified and transitioned into the POC phase for expedited evaluation. All right, so what's the significance of all this? So essentially, Innodata came out with a AI solution which to replace a human and making abstracts in German, and they had 44% favorability versus 58 with a human. So I mean, an instantly generated version working 44% versus a human at 58%. That's a massive efficiency gain. And in the Dutch keywords, as you saw, the actually beat a human because they had 25% exact dash rate versus 22 for a human. So Innodata clearly is driving effective solutions for their customers and increasing efficiency. Now we have a pretty good grasp on the supervised fine tuning, which is a huge product for them. We're just going to look at some of the other stuff that they offer real quick. So under generative AI, they have obviously the supervised fine tuning. They have RLHF, model safety evaluation, and red teaming, which is a big one for me, and data collection and creation, and then have their coming soon Gen AI platform. We don't quite know what that is yet, but we'll get into that eventually. Once it comes out, we'll get some more information on that and see how that really does commercially. And then they have their traditional AI products too. They have data annotation and then data collection and creation, and then they have their annotation platform as well. So clearly, they're covering a lot of bases under AI, and they have plenty opportunities to expand revenue by having so many different products that have proven to be effective. Wait, folks, there's more. So they also have AI for the enterprise, which includes consulting, AI services, digital services, business process management and managed services, document intelligence platform, and they also have industry-specific platforms like Agility PR and medical record data extraction Synodex. So we're gonna try to keep the video pretty condensed here. I'd highly recommend you go on Innodata's website and you go look for the stuff on your own because you got to make sure you do your own research. You can't just trust some guy on the internet like me. So yeah, go through that on your own. But clearly, kind of gets the point across here that they have plenty of different products and they have their fingers all tied up in the AI, generative AI race, which is super important for these AI companies coming up because they want to be covering all their bases for because each specific application of AI could have vastly different outcomes over the next 5 years. Nobody really knows at all. So the fact that they have so many different webs and fingers in different places is going to be super helpful for the business going forward. But like I said, check that out yourself. Do your own research, please, please, please. Probably thinking, well, that's all cool. They do all this AI stuff, but who the hell is actually buying this stuff? Well, it turns out we have huge companies partnering them with Amazon, Microsoft, Google, X, Sony, Deloitte, many other huge companies. So clearly their solutions are effective, picking up traction. And I mean, let's be real, in the AI race, a few of these big companies, specifically mostly in the Mag 7, maybe a few others, are really taking the cake in AI. So the fact that these guys are working with them at being such a small company, working with these absolute giants, is putting them in position to really capitalize on this generative AI opportunity because that's really where any sales expansion they're going to get is going to come from. Yeah, honestly, here what I'm really digging about Innodata is the fact that they understand that generative AI and AI in general is going to be the future, and they're really just going balls to the wall for it. I mean, they're not afraid. They're putting their entire business on the line and betting on that AI is going to be the future. And you just love to see that they're just in the right place at the right time. They have the infrastructure in order to be able to pull this whole thing off. I mean, you can see they're just AI solutions, AI solutions, AI solutions, AI solutions. They're just going all in, and we just love to see it. And that's going to bring us to our next thing, which is going to be valuation, because, you know, all fine and dandy, they're AI, blah, blah, blah. But it doesn't matter if they're not going to be, I mean, you have to figure out what they're valued. It's way better to buy a great company at a fair price than a bad company at a good price. So we need to find out because clearly it's clear that Innodata is the right place, right time. They're a great company. They're going to do great business wise going forward. But now, as an investor, we need to figure out, okay, if I put my money in Innodata, what am I looking for? What's the kind of valuation? What kind of premium am I paying? So that is where we're going next. All right, so we're going to take a quick look at Innodata's balance sheet here. So they have a total current assets. So I like to look at current assets versus current liabilities and then long-term debt. So current assets of 92 million, which includes 56 million of cash and 30 million of 30 million of accounts receivable. And then they have total current liabilities of only 39 million. So their cash easily covers that without even getting their cash, assuming they don't even get their accounts receivable, they're able to pay off their liabilities easily, and they only have long-term debt of under $10 million. So that's not going to be a problem for them at all. Interest isn't going to weigh on their bottom line at all. So that's going to also allow them, if they want to go seek debt in the future to raise more money, if it so, helps their business. So with that said, that's a pass. That's perfect. You love to see a balance sheet like that. I mean, obviously more cash the better, but they have solid cash position, lack of debt, not going to cause any problems in the future. That's really what we look for in the balance sheet. Right now, taking a quick look at their annual income statement, you can see in their revenue, they've had since 2020, they've had very steady growth. They went from 58 to about 70 to about 79 to 86, and an absolute boom in 2024 to a revenue of 170 million. They also have pretty consistent gross profit margins. And then going down to their operating income, they were operating income negative. They had a slight profit in 2020, and then a slight loss in 2021, and then they had a gain. Let's see, then they had an operating income of minus 10 million in 2022, very slight gain in 2023, and then they had once again a boom to 24 million in net income in 2024. So clearly, in the last 12 months, it's really, really picked up. Their AI business is starting to grab traction and they're really, really starting to grow. So, with that, we're going to move on to the quarterly and see in the shorter term what kind of trend we're seeing with their different revenue margins and different. Right, so now taking a peek at the quarterly income statement, we can see that in the last 3 quarters, I mean, INOD has been on an absolute moonshot. They went from in Q2 2024 to Q3 2024, they went from 32 to 52. Huge gain, huge gain. And then they followed up again with 59 million in revenue. And then this past quarter, they just reported last week was 58 million in revenue, which is a little less than Q4. But in the past, I mean, if you look back at previous years from Q4 to Q1 is usually not a big gain because in the software business and data engineering, blah, 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 and big, data engineering and all that, Q4 is usually just a big quarter because extra corporations are like, hey, we have this extra money, let's spend it here. And so Q1 is usually not very big for them, anyways. But to see them do 100% year over year once again is just huge for INOD. And so we see in their margins, their cost of revenue hasn't expanded greatly, and they're maintaining their margins. I will put the margins up on the screen there for you so you can see those. And we're posting consistent net income and operating income. So it's clear INOD's growing. Their business is gaining traction within the AI revolution, and they're putting their mark there. They're doing what they need to do, greatly expanding revenue, and honestly, you just love to see it. So we're going to take these numbers. Like I said, margins will be up on the screen. And then we are going to make a valuation model and see what we think INO is worth, see what we're willing to pay for it, and we'll go from there. All right, guys, here you see the outcomes of my valuation model. So in my bear case, which is my worst case, I see a 2029 fair value of $59 and a 2025 value of $24. In my base case, we see a 2029 fair value of $237 and a 2025 value of $91, which is nearly, yeah, I mean, it's 174% from the current price. And then our bull case, which is huge, guys. This is massive. We see 2029 fair value of $680 and a 2025 value of $280. I mean, you see over here to the right of those numbers, the assumptions. So, I mean, I'm not using crazy numbers, but we will go over that in just a minute. In each case, we'll break down each individual assumption that I made and why I made it. And then there you see at the bottom our percent change to estimate. So, based upon our bull case and our base case, we're looking really good. With the bear case, obviously, we'll go through that in just a second. But our base case of $91 is looking really good against the current price. So now we'll go through in bear, base, and bull in order. We'll go through our assumptions and why I made them. All right, guys, so here we have our bear case model, which is going to show what I think is the absolute lowest performance of this company can put out based upon what they've done so far. So right now, I'm assuming right about revenue growth of roughly, so as you can see here, management says 40% at least for 2025. I'm saying 30% for 2025, 25% for 2026, 15% for 2027, 15% for 2028, 12% for 2029, 10% for 2030. So we're saying that they're gonna decrease this rate of the revenue growth because, mind you, they grew at 100% last quarter and the year before. The whole 2024, they grew 100%. So we're saying they have a intense revenue decline, even though that they're in one of the best spots in Gen AI you could possibly be, and a huge revolution is taking place. So we're assuming really bad there, and then we're assuming little to no margin expansion. We're assuming 17%, even though in 2024 they did 16.8. You may notice that, and I put they only did like 13% for Q1. Q1 is usually the worst margin quarter of the year. It's just kind of how it pans out. And so for the whole year, they're obviously going to do better than that, most likely. And so I'm assuming 17%. And then we throw that in our earnings approach and price to sales approach. So I value that. So I grab the 2030 numbers because typically use a forward multiple. So in 2029, you value based on 2020, 2030, sorry. And so we're assuming a forward PE multiple of 22 times, which is very low. I mean, for this industry, usually companies are going to be 30 to 50, but you never know. So we'll go 22, and then that will give us, based on the shares outstanding, I'm assuming not a large expansion of shares outstanding of 31,300. That'll give us a target price in 2029 of $54 based upon earnings, and then price to sales, we're going with a 4.5 price to sales, and then that will give us a target price 2029 of 64. Discount rate is essentially saying, okay, well, it's $65 in 2029. Since it's a risky stock, right? I want to get like twice S&P 500 of 12%. So we're going 25%. So you discount that five times backwards, and then that will give you a target price of $27 for price of sales, 22 for price of earnings. I average those two together to give me a little better reading, and that'll give us 24 and 59. So there's our base case, and now we are going to move forward to or sorry, that was our bear case. I said base case. That is going to be our bear case. Now we're going to move forward to our base case. All right, guys. So now we are sitting here looking at our base case. So for our base case, obviously, we are saying that management is going to execute on their growth as they have in the past, and they're going to get 40% revenue growth, which is the bare minimum of their range, by the way. They just want at least 40% revenue growth. And then we're going to 2026 at 35% revenue growth, 2027, 35% again, 2028, 30%, 2029, 30%, and 2030, 30%. We're saying they slow down because as they get more customers and stuff, it's gonna be hard to acquire even more than that. But quite honestly, they could continue the 40%. You never know, but I'd just like to be conservative here. And then so we're going with net income margin of 22%, a forward P multiple of 35 because they're growing 30% revenue. I think a 35% multiple is plenty fair. Or 35 multiple, not percent multiple. There's 35. And then shares outstanding at 31.3, staying the same, and then a discount rate of 25 as always for these kind of stocks. And that'll give us price target of $96 on the price to earnings side. And then on the price to sales approach, we're going with a price to sales of 7 and keeping the same 2029 shares count at 31.3. That's a million, of course. Everything is in thousands here. And that'll give us a target price of 213 in the future. Discount rate 25.87. Average that together, we got $91, which is going to be 174% upside from now. So I mean, we're saying that I'm thinking here, sorry, not Palantir. I love Palantir, by the way, but Innodata is about 150% undervalued, guys, based upon my base case here. So I see huge upside as long as they can continue to execute. I mean, we're looking at a PEG ratio of only 1 in this case. So, I mean, if they continue to execute, there's almost no way that the price doesn't follow. I mean, we've seen in the past it's gone from about $6 to $70, now it's back down to about 35. People are starting to pick up on this. I mean, they're right in the center, guys. I mean, with AI, the whole point of AI is efficiency. That's what these guys do. I mean, they do efficiency. They go in, as we saw in our success stories, they go in and I mean, they saw they matched what the human could do in hours of time and seconds. So I mean, it's super efficient. They have a huge TAM. So these numbers are really realistic. Management, I think, is totally going to hit these numbers. So based upon that, I mean, we're seeing huge upside. So now with that said, that's our base case. We're going to go to the bull case, which is pretty crazy, but you kind of have to chart what's your maximum potential here. So now we're going to move forward to our bull case and we'll see what kind of our maximum potential is. All right, you guys, here it is. Here's the bull case. As you see in the top, all numbers in thousands as always, just make it a little easier to read. So we got growth of um, 50%, 50%, 45, 45, 40, 40. So big growth numbers here. We're on a net income of 25% margin, which is going to continue, assume margin expansion. But I mean, let's be honest, they went from about 4% to 13.3. I don't see why they can't go any further. As they grow, they'll get a little more efficient. I mean, they seem to have no problem getting better over time. And yeah, so we're going to go 25% growth margin, or sorry, 25% net income margin. And then we're going to assume shares outstanding don't change as the other cases did as well. And we got a target price to earnings of 700 roughly and 671 for price to sales using price to sales of 12 and discount rate of 25 as always for these kind of stocks. And then, I mean, yeah, you can see that gives us $280 or so, which is huge, guys. I mean, that's about 8x from here just for the current, what I think it's worth at the moment. So we're looking at a potential generational opportunity, in my opinion. I mean, I'm kind of like taken aback by how big this is. I mean, this is only assuming in 2029 a PEG ratio of 1.1, which is like, I mean, that's the fair value. You could always assume a valuation bubble, and we could see a stock price of up to 1,000 if they execute like this. So there you have it, guys. That is my due diligence, as I like to call it, of Innodata, ticker symbol INOD, INOD. So thank you guys for watching so much. This is getting a pretty long video, so I'm going to cut it here. About 22 minutes. If you like this, like and subscribe. Just leave if you guys see anything you think is a little off and you have any questions about, just throw it down in the comments. And if you like to see anything, if you have some other stocks you'd like me to research and do this kind of video on, just drop it down in the comments. And I'd love this is my first video ever, so I'd love to respond. I'd love to see what you guys think. And thank you so much for watching Systematic Investing. I will see you next week. Bah.